Hi there. In our series on financial basics, I want to cover break-even analysis, or what other people call break-even point. My name is Boomy Tokan. Break-even analysis is a very useful tool that you can use to determine how much in terms of units you need to sell to cover all your costs, or how much sales you need to make to also cover all your costs. So it's a very useful tool, both before you start in business or even whilst in business. So let's get started. In this video, we're going to cover an example of break-even by number of units that need to be sold. We're also going to look at what break-even means, how it is used, specific terms to remember, the break-even formula itself, and also how to calculate break-even. All right. Break-even, really, when we think about a definition that we can use, the main reason for working out a break-even analysis is to ensure you fully understand and comprehend the amount of units you need to sell so that you are covering all your costs and really making no losses. It can be used to do two things: to calculate the number of units you must sell to break even, or to calculate the amount of sales that must be made in monetary value to actually achieve a break-even point. So now, here are four terms you need to remember. The first one is your selling price, the price of which you are selling your products. The second one is the variable cost, or cost of goods sold, which are the costs that are directly incurred in order to make each sale, or which vary with output, i.e. raw materials. If you're selling books, for example, the cost of printing and paper costs for each book will be a variable cost, or cost of goods sold. The third term to remember is contribution or gross profit. This is going to become very important later on, which is the difference between the selling price and the variable costs, or cost of goods sold. The contribution, I say that again, the contribution is the difference between the selling price and the variable cost. Finally, fixed costs are the costs that do not vary with output. Typically, rent and wages do not vary with the volume of sales that you make, except, of course, wages would vary if you were paying on commission basis. But typically, they don't vary with the amount of sales that you make. So it lands itself in the fixed cost arena. So let's look at the break-even formula and start working our way through now. The break-even formula is fixed costs divided by the contribution. That would give you the break-even in terms of the number of units you need to sell. Remember, we said that break-even can be used to calculate two things. One is the units you need to sell, or the monetary value of sales you need to make. In this first example, we're only going to look at the break-even in terms of the units you need to sell. So that formula will be fixed cost divided by contribution to achieve break-even. The second type of break-even, which we're going to look at in the next video, will be break-even in terms of sales volume that needs to be achieved. So that break-even will be calculated by multiplying the break-even in units by the selling price, and that will give us the amount of sales we actually need to generate to make the break-even in terms of sales volume. All right, but we'll come to that in the next video. So in this one, we're focusing on break-even to determine the number of units of sales we need to make. All right, so how do you calculate this? Well, to calculate your break-even, you need two very important figures. The first one is the contribution or gross profit, which is the difference between your sale price and your variable cost. Remember, we talked about that earlier. And the second important figure you need is your fixed cost, the total fixed cost. All right. Once we have that, we can then go and do an example. Let's have a look at this example. We're looking at a business selling digital information products online, and this information product costs $100. So the selling price is $100. And the variable cost, which is the cost that vary in accordance with the numbers of units sold, that cost is $20 for this example. And the fixed cost, the total fixed cost for a particular period, which we're looking at, let's take an example of a month, the total fixed cost is $2,000. So we have selling price for $100, variable cost $20, and fixed cost $2,000. To work out the break even, it will be, as we said earlier, also fixed cost divided by contribution. That will give us the number of units, the break even point, the number of units that we need to sell to cover all our costs. So from that example, from the example we're using, fixed cost, remember, it's $2,000. Now we need to calculate the contribution, or what we call gross profit. So what's that? That's going to be selling price of $100 minus the variable cost of $20. Remember that variable cost, or cost of goods sold, is the cost that vary with output. So every single unit sold actually costs $20 for every single unit sold. We deduct the selling price from the variable cost and we have $80. So the contribution, or gross profit, we're going to use the word contribution from now, the contribution is actually $80. So remember the formula. The formula is fixed cost divided by contribution will give us the break even in terms of units. The fixed cost is $2,000. The contribution of gross profit is $80, and that gives us a figure of 25 units, which is the break even point in terms of the number of units that must be sold to cover all the cost of running the business. So I've put it there in bold letters. 25 units of information products needed to be sold to cover the costs of running the business. So in terms of this particular example, we must sell 25 units of information product at $100 each to cover all our costs for running the business. All right, in this video, we've looked at an example of break even by number of units, what it means, how it is used, specific terms to remember, the break-even formula, and we've calculated it by an example. And now in the next video, we're going to come to how to calculate the amount of sales that must be made in monetary value to achieve break-even, which is the next video in our series on the break-even. Right, if you like this video, like it. If you like it, share it. Subscribe to my channel, write a question or comment below, and email me if it's a private one. Boomy at startyourownbusinessacademy.com. I look forward to seeing you soon, and give me some feedback. Let me know what you think of this video. Talk to you soon.